Hello, everyone. My name is Sunday. I welcome you to Against FX. Uh, if you are new, please do subscribe to my channel. And if you are watching this video, you are seeing this video for the first time, I would like to remind you that we are on a 1 month, full month crash course free. All right, so every day there is always a new video when if you're the type that wants to learn how to trade, how to be a forex trader, and you don't have money to buy it or rather to pay for a course. So that is why I decided to offer this. It's a free course, 1 month. It's going to run for the whole of this month. So all you just need to do is just for you to, maybe you have a laptop, or if you don't have a laptop, a desktop, if you don't have a desktop, maybe on your phone. So you just need to register, subscribe to my YouTube channel. From there, once you have done the subscription, then you now go to a playlist. All right, you just search. When you go to YouTube, search for Against FX. All right, Against FX. Then you now subscribe. Once you have done the subscription, the next thing you need to do is to activate the bell sign. So anytime video is released, you'll be the first to be notified. And apart from that, you after this subscription and the activation of that bell sign, you just need to go to a playlist. All right, playlist. There's a playlist entitled uh, Beginners Free Course. So that's where we have all the videos for beginners for you to start learning step by step everything you need to know as far as trading is concerned is in there. So the ball is in your court. Take the video one after the other, then watch it, take notes, and at the end of the day, you develop yourself based on the foundation you have already received. All right. And I urge you, any video you watch, you have to be serious. You must take notes. And if you're having any difficulties, please notify us so that if there's any need for us to make a video to answer your questions or your doubts or the difficulties you find yourself in because it's a new field, then we can make video to clarify some certain issues if you're having any, That being said, please share my videos, subscribe, share my videos, and drop any comment. All right. If you have a comment, please leave it at the comment section or you email us. All right. So that being said, yesterday we started strategy, and we've talked on so many strategies. We have so many strategies, but the one that I would recommend is smart money concept. SMC. So we've talked about the part one. This is a part two. It's going to be in series because strategy itself is something that is broad. So we need to start tackling it step by step. So this is part two. All right. So why do I recommend SMC Smart Money Concept? Because it's something that is a strategy that you use and you have rest of mind in the sense that you learn to trade without emotions, right? Because all you need to do is analyze the chart, single out your order block, refine it to your time of execution, the time frame that you use to execute your trade, you refine it to refine the other block to that level, to that time frame. Then all you need to do is you set a pending order, and that's all. You can go on about any other thing. So when price get to your POI where you set your pending order, the order will be triggered. All right. The order will be triggered, then you'll be in the trade. So that is how it is, guys. So it's very, very uh, simple and straightforward. All right, because trading itself is something that if you if you're not careful, it will mess up your psychology. It will mess up your psychology. So you have to be very careful. Provided you know what you're doing, you don't need to care. So before you take any trade, there must be reason why you are taking that trade. And you have your checklist, and when that checklist is met, you don't need to hesitate. Take the trade and allow the system to do the rest. All right. So because you should know that once you press sell button or buy button, is totally out of your control. All right. But we can still control it by all the others instructions that we have already passed to our broker, the stop loss, the entry, and the take profit. All right. And apart from that, the only thing you need, another thing you need to do once the trade start to run, then you can now apply what we call trade management. Trade management is different from risk management. All right. We are still going to teach all this. So there are so many those we are going to take it one step at a time. So that being said, smart money concepts. Now there are things you must know for you to be able to trade SMC. Number one of it is market structure. You know, I keep hammering on market structure, market structure, market structure. All right. Just like somebody who says he knows how to build a house and he cannot tell you how a foundation is laid. So how will you believe that person? So it's very difficult. Or somebody who says, oh, I can drive, and that person has not driven before. All right. Now, for example, a market structure, you should know that you must know market structure. The structure, how this is market structure. And it's not just anyhow thing that maybe you see candlestick, you just be looking. This what is going on between buyers and sellers. All right. This what is representing the market. This is the market structure, is the one representing the activities of the market, what is going on between buyers and sellers. So you must at any point know what the market is doing. All right. You should know what the market is doing. If you watch my yesterday's video, you discover that right now you can see we hit take profits. All right. We hit take profits. This is another break of structure. It was here, it broke structure, now, then pull back. Yesterday, as at yesterday, we were here. So you can go and watch my video, yesterday's video, all right, on the 10th. Look at it. We were here, we were somewhere here on this candle, this very candle here. And immediately this candle closed and it opens here, we entered. I told my guys, oh yeah, take position. And we rolled the trade up to this level because this is where we took our profits. This very one here, negative 27. All right, this is where we took our profit. And immediately after that, price gave us a new high. This was a previous high. Now, this is now the current high. This is the current price. Now, what is the price doing, guys? Pulling back. A retracement that is ongoing now. Do you need to do anything? No. Wait until the retracement is finished. Once the retracement is finished, then we can now enter again. As simple as that. If you take this, I told you guys, we're just deviating from, though it's still part of teaching. I told you guys, for you to plot your Fibonacci retracement tool, if you have not watched that, go and watch that video. I already make video on how to use Fibonacci retracement tool. Before you plot your Fibonacci retracement tool, you must have a range, price range, low and high. This is the price range. This is the low and this is the high. So you plot from here to this point. Let me remove this negative. Let me remove negative 25, 127 so that you guys will not get confused. You see? Now, we are expecting price to pull back beginning from 23.6 to 38.2, a minor. This one now, if it gets here and it found support, it's going to bounce. Otherwise, it will break through it, come down to this level, 38.2. If you found support here, that is just a minor pullback, then it will now bounce from here. Otherwise, if it breaks below, that means it's coming to 50. If it breaks 50, it's coming to 61. So that is how. Anyway, you now find support, then you will now see a rejection before price will now start going back to create a new high. Or otherwise, price will just pull back a little, push to the upside, then it will not take out this high. Once that happens, you know that price has given us a lower high. That means we are preparing to start going bullish. The next you will now see is market shift. Then before a break of structure, establish downtrend, price will now start coming down. As simple as that. So what are we saying? I'm saying that you must know how to read market structure. Because for you are going to be doing market analysis almost every time. This thing we just did now, I've just analyzed this structure now. I've done analysis right now. So you must know market structure. Then I have a video on market structure. Please, and I'm still going to touch on that before we wrap up this course. All right. Market structure is key, is the foundation of trading. You must know when to buy and know when to sell. You must know if a trend is bullish or when a trend is bearish, or rather is consolidating. If it's a sideways market, you can just close your system and forget about trading and that day or that period until there's a breakout of that range. All right, so you must know what market structure is all about. Then let's just touch on it because it's critical. It's critical. All right, it's critical. All right, so I'm going to clear these things off and make this chart very clean and plain. So we are starting from here. If I say, okay, what is this structure now? What would you say is this structure? All right. What will you say? I need you to drop it at the comment section. Excuse me. what would you say? As far as this structure is concerned, what will you call it? Will you say it's a downtrend, uptrend, a sideways market? What will you call it? Please let me see your comment at the comment section. Okay, now we are starting from here, all right, from this point, all right. Price gave us a new high here. This is a high that price gave us, all right. Price gave us a high, all right. You can see it. Now, no, I think let's use this. Let's say, let's call this a high for the sake of learning. So the time I'm recording this now is almost 5 minutes to midnight here in Europe. 5 minutes to midnight. And I'm still awake to just teach on this. And it's for free. So the only thing you need to do is to subscribe to my YouTube channel. That's all. Activate the bell sign. Go to the playlist. All right. Go to the playlist. You will see all those videos. Those are materials. Watch them, take notes, and see. If you don't know how to trade, after everything, you must know how to trade because everything you need is what I've just recorded on YouTube, on video for you, step by step, how to be a trader. There's nothing more, nothing less. The only thing you now need to do is now take a deep dive and be developing yourself. Like yesterday's video, I told you guys, okay, it's time to download TradingView MetaTrader 5, or if you like MetaTrader 4, that is the old version. Download it then. It's free. Then link up to choose any broker of your choice. I'm not promoting any broker. Choose any broker of your choice. Connect it to your TradingView or MetaTrader 5, MetaTrader 4, whichever one. Then create an account. Then you have a demo account like that. You have a demo account and there's money in there for you to trade for free. All right. So what you just need to do as you go on there, you practice. You watch the video, you practice. You watch the video, you practice. It's like that. So let's go. This is high. This is a high. Why do we say it's a high? We are simply saying it's a high because let's assume this very side now, there is no price. Let's say price got here, and we say this is the high. All right. Now, from here, price went up by this created this high. It now came down. All right. It now came down, violating this level. Once that happened, we simply say market shift has happened. Market shift has happened. Market shift has happened. Happened in the sense that this very one here is what? It's a break of structure. All right? It's a break of structure. It was the last break of structure. It's not that clean, but you look at it very well, you discover that there was a push above this level. All right? It's not that clean, but you have to take it as break of structure. Then from here, after this market shift, price now give us a break of structure to the downside. Then it now got here, it got rejected. This is the low, the lowest low. After this point, it got rejected. And price started pushing to the upside like this. We got change of character here. For us to see change of character here, we are simply say change of character because this was the last break of structure to the downside and price created this low. All right, giving us a resistance here. Anytime we are bearish or on a bearish trend, price has no business violating the resistance level. All right. Once you see price violating or has violated the resistance level, just know that that trend has changed. It's going to be going up. And anytime we are on a bullish trend, the price is going up. I now see price violating the last support level. Just know that that trend is about to change to become bearish. So that is how it is. That you must put in your head. You must remember it every time. So now that this resistance level has been violated, price giving us a high. Now, we now have a high here, all right, giving us a new price here. Because you see, after that new price, you now see a pullback. This is a low, giving us a low here. That is support. Giving us a low here. All right. This one is a high. Then price now pull back to this level. All right. Price pull back. There will be pullback for price to now. Price now created a low. After that, it now started pushing to the upside, giving us a break of structure. Giving us a break of structure. Giving us a break of structure. After this, price now push again to the upside, giving us another break of structure. All right. After this high, price pull back to this level and now break structure again. We now have another high. Another high. We have a high here also. That is break of structure, but is a high. You see? After this high, you see low. Give a low here. All right. Price also gave us another low round about here. You can see this is how to read structure. Now that price has pushed up, giving us a break of structure to this level, and price has given us a new high. What do you think, guys? Is it not time for price to pull back for price to create a low? Price should create a low. And how do you now determine where the price will get to? Now, there's one thing we should understand. This break of structure, this one, is more obvious than this. All right? It's more, this one here and this one here This very one is more obvious than this very one here. Now, this is the first support level, and let's take it further. Let's take it further in more advanced way. Here we have sell side liquidity. Here we have what we call sell side liquidity. Don't get confused, guys. And here we have, this is a little advanced, but you just need to, I need to teach you everything. This is what buy side liquidity. Enough, enough of all this drama. This is sell side liquidity, buy side liquidity. Why? Because this is the support level. This is the resistance level. Now, if price, what price should not do is price coming, now that it has broken structure to the upside, it has created a resistance. All right. This resistance now, this is where buy side liquidity is sitting. Why do we call it buy side liquidity? The buy side liquidity because sellers are here. All right. This is where they will stay to get involved in the market so that they will now push the price down. All right. They will push the price down to the downside. So their stop losses, their entry, all their pending orders are here. All right. And even buy stop orders, they are even around here too. All right, because you set your buy stop order and it's in anticipation that as price move from here, it should trigger you in before it start going higher again. So this is a buy side liquidity and this is a sell side liquidity. Now, if price, if it's pushing to the downside, he has no business coming down below this level. This is a support level. Anything that will make price to go below this level, that means it has come to take this liquidity, this sell side, the sellers came to take this liquidity. All right. Now, what we don't want to see is price violating this sell side liquidity. Once price violates this sell side liquidity and it body breaks it, what do we mean by body breaking? The body of the candle that will get to this point will push below this level. All right. One of the signs for you to know that price just came to take liquidity and the aim is to go back to resume the underlying trend is when you see something like this. Price will come down, now push below it, but before the candle will close, the candle will go back and close above it. You just know that that is not a violation, that is a liquidity grab. All right, before price will now start going to the upside. So we have buy side liquidity. Now that if price is coming down, he found support. Once he found support and is now going back, that means all the orders that are here, buy, stop order, uh, stop loss orders, so that are here, all depending on us, then the buyers will now push the price for this price to now clear all these orders, all right, activate all this order, then use that to facilitate the push to the upside, breaking this level, all right. Once price is coming up, the target is for price to clear all those orders that are here, all those liquidity, because they are liquidity. Liquidity is not a bad thing. It's what makes the market move. All right. So if you find yourself at the wrong side, your order will not be used as a liquidity. All right, that's why they always say trade with the trend, not against the trend. All right. So that is how it is. So we have buy side liquidity and we have sell side liquidity. If price is pushing to the downside, the target is always the sell side liquidity. All right. Otherwise, once it finds support before it gets to this level, it will now turn and start going to the upside. All right. So once it turns, that means every other order that are here will now be used as liquidity. So price move in two ways. Either it comes clear the sell side liquidity, or it goes back to clear to grab the buy side liquidity. And where do we have the buy side liquidity? We have it at and where do we have the sell side liquidity? We have it at the support side. Where do we have the buy side liquidity? We have it at the resistance side, at the resistance level. As simple as that. So you must know how to read structure, guys. It's very important. You know when there's a break of structure. Now that there's a break of structure, what really caused the break of structure? Now that will now take us to the next point. Oh, I've cleared. Can you imagine? I have cleared everything that I've written. Are you serious now? Right now? Oh, no, no, no. Anyways, I cleared them. I didn't know. So you have to first, the topic is smart money concept. SMC, SMC strategy. This is part two. Yeah. Sorry, guys, because I didn't know. I just cleared the chart and that's what happened. Okay, so like told you guys, I said we need to know how to read market structure. That was the first thing. You need to know how to read market structure. I'll explain that. All right, I'll explain that. And you need to know where break of structure. You need to have you need to know the origin, that led to the BOS, the origin that led to the break of structure. That you must be able to identify. And apart from that, you must check out for must check out for um, fair value gap. Check out for fair value gap, and also liquidity. Check out for liquidity. So we've talked about market structure. You must know how to read it. You must know where break of structure. You must know how when price is pulling back. Now that this guy here, price is here, all we need to do is get the range from here to this point. Now, anything from this level, we should be waiting for price at this discount level. I've talked about this countless times. So we have the discount level, and we have the premium. Since we are pushing to the upside, the price is going higher. Now it's just a pullback or a retracement. You are expecting that price should pull back to a discount level. Then we can now buy again. Once we buy, we should be targeting this buy side liquidity. As simple as that. So now, as a smart money concept uh, trader, what we need to do next is, okay, we now know that, okay, this is, since it's been breaking structure to the upside, it's a bullish trend. All right? It's a bullish trend. So this or the other one here is you trade in the direction of trend. So if you don't know how to restructure, how will you now know the direction of trend? So the market structure, you must know how to read market structure. It's no option, it's compulsory. All right. Without that, you can't do anything. And apart from that, the origin that led to the break of structure, anyway, you see POIs, you should understand. Now, I've already taught you guys on how to single out order block, right? How to single out order block. I've already taught you guys. So I don't want to start going. All right, let me still touch on that. Okay. Now, as we can see this one, this is on 4 hours, then we now know that, okay, what is going on here? We see, okay, this is the last candle here. This is the last candle. Remember, guys, I told you it's not always uh, um, a bearish candle that you will see before you see that big fat candle that now push to the upside. This is the guy that led to the break of structure. That is the other block. OB. That is the other block. Now let me bring this thing so that you will now understand it very well. That is the high and this is the low. This is the candle that led to this push to the that gave this push to the upside. After this small candle, you now see volume now stepped in All right, you now see push to the upside, to the upside. So this is the other block candle. This very one is the one that triggered this buy. So that is the other block. All you now need to do, as you have highlighted the top to the bottom, you now shade it to the right hand side. All you need to do is just keep scaling down to any uh, um, time frame that you use as an execution. Like me, I take my trade on 4 hours. So immediately I've done this now, I will only wait for price to return back to it. Then I will enter, or I will set a pending order here. I will just click something like this. You see there are buy limit order, sell stop order, and orders. All right. So you can set, because it's a bullish trend. I just need to set buy limit order, meaning that price we come back here, we come back, tap me in, change character, then start going to the upside to take out this buy side liquidity. As simple as that. There's no magic. All right. Now, what do we now have present? That will now take us to another this thing. The origin that led to the break of structure, we now see if this is the origin. All right. Price will now come back to that same origin, fill all these orders that are here before you now gather momentum and start pushing to the upside to go and create another highest price that will now be higher than the previous one. So that will now bring us to another point, FVG. Remember, every FVG must be, that is fair value gap, must be present. All right. Once fair value gap is present, you just know that, okay, institutions were involved in that push. That is why a gap was created. And what do you mean by gap? Look at it, guys. Let me show you. It then means the gap that we are talking about, the FVG fair value gap that we are talking about, this top of this candle, this other block here, the top, to this bottom of this next candle. You see, this is the gap from here to this point. All this body here is what we refer to as fair value gap. So ordinarily, price is not supposed to print like this. All right, leaving let's say, for example, price will just move from $100 to $500. That is what it means. And in financial market, in trading, if that happens, price will come back to come and level up to close the gap. So this is what we call a fair value gap. The top of the other block, the high of the other block, to the low of the next candle after this one, the next candle. So all this is what we call fair value gap or imbalance. So that is how it is, guys. So after that, liquidity. We're talking about liquidity. It simply means that, okay, as price is coming down, all right, as price is coming down, if you scale down, for example, if you scale down, all right, like this very point here now, this very point here, as price has pulled back to this level, all right, this level here, a lot of people must have started placing their orders here, all right, placing their orders. So thinking that, okay, this price will start pushing to the upside. Now, what it then means is that this level, all right, because we are SMC trader, smart money concept trader, we are simply saying that this level is where money is sitting because of orders that a lot of people must have placed, thinking that price will start going up, not knowing that because they don't know that this price here, as is what is doing now, is a sign that price wants to come down. It wants to retrace. And the retracement will have to go below this level. So automatically, this level here is now regarded as a sell side liquidity. Sell side liquidity. All right, is a trap. All right, is a trap. This is not a strong support level. It's a trap. All right. So what you will notice now is that price will now come back, clear these people, because there will be so many orders here, people that don't know how to trade, even some who know how to trade do make such mistakes. So they will now set orders, or rather, they are already in the trade, not knowing that price action should price action is preparing to start coming down. So this very point here is what we tag as liquidity that price will grab before it starts pushing to the downside. All right. You can see this is another block here, this very guy here. So you can see, do you understand? So this is how it is. On these 30 minutes, we can even say this is the other block. 30 minutes, we can say this is the other block here. On 30 minutes, you can say this is the other block. And this is the last candlestick before this trigger. This one is 30 minutes old B. This 30 minutes OB. So you can see, but the thing is that the higher time frame always have the force. All right? But when you look at it, you now discover that this has been mitigated on the lower time frame. You see price push to the upside, you now see liquidity grab to this downside, pushing out all the people that have already entered from here, thinking that the price want to start going up. Then you now see a massive push to the downside to now push these people out. But when you scale up like this, you discover that, look at it. When you scale up like this, you discover that this is the other block, and this is the liquidity graph. Did it get to this point? It did not get to this point because this is the real support level. This one here is a real support level. If you had entered from here and your stop loss here, there's no way this push here, this one here, that tends to take liquidity, there's no way it will get to your stop loss. Why? Because you are in tune with the higher time frame. This is the sell side liquidity. All right. But people enter from the lower time frame, their stop losses will be around here. That is why I see this push to the downside to stock them out. So that is how it is. You cannot see on the higher time frame now. When this place that we marked, is there anything there? There's nothing, there's just a candle. You see, but when you scale down to the lower time frame, you will see, it's now see. You will see that people that are on the lower time frame, they are easily trapped. They are easily trapped. So don't trade on lower time frame, trade on a higher time frame. It's very important, guys. Please, please. You can now see this is pushing to the downside. All right. Let's go. Then what is the next thing again? The liquidity graph, we have identified them, we have identified. You don't need to stay on the lower time frame. When you want to do your analysis, make sure from the higher time frame and any level you want to follow, you want to mark. Once you mark it on the higher time frame, on the lower time frame, you just need to be in tune with the higher time frame. All right, mark the level from the higher time frame. That is how it is. And I don't even see any reason why you should go to the lower time frame. Just trade a dormant trend. No, without um, disturbing yourself. Trade a dormant trade, a dormant trend. On the higher time frame is always dormant. When it's going, it's going. When it's coming down, it's coming down. All right. All those clumsy, those plenty noise is not found on a higher time frame, guys. Please, as we are learning, just learn with the higher time frame. Concentrate on the higher time frame. You might not see plenty trades in a week. You can just take one or two trades. It's okay. You understand? On lower time frame, you just see different first sector, and at the end of the day, you just be shooting yourself on the leg. All right. So that is the liquidity. All right. Now, trade in the direction of trend. Guys, you don't want to go against the trend. That is the worst thing that will ever happen. The worst thing that will ever happen. That is why I said you must learn how to read structure. Not just reading it. Know when to get in and when to get out and when to stay away. Why? Because you know what is going on. Once you see the structure, you already know what is going on. You already know what is going on. If it's something that is tradable, immediately you enter. If it's something that is not, if it's something that is tradable, you know when to get involved. If it's something that is not tradable, just stay out. Wait until uh, you understand what is going on. All right, there will always be opportunity in the market, so don't rush. Like I told my guys, and I'm telling you guys now, it's an advice. As you are coming into the system, you want to know how to trade. You must wear garment of patience. You must wear garment of patience. Sometimes a day, 2 days, 3 days, you don't have setup, and there's nothing you can do about it. That means you are not trading. You have books, you have plenty books. As a trader, you need to buy books. Look at it. You need to buy books to read. All right. And this cash flow quadrant by Robert. Robert T. Kiyosaki. Uh-huh. And I still have another one, Atomic Habit. All right, I still have another one, Atomic Atomic Habit. All right, Atomic Habit. So many like that. All these ones are just the ones that are just good. You need to, once you don't have a trade, you must read. And apart from that, traders, you need to read so that to renew your mind always. All right, don't just sit there and be looking at the chart and be pursuing trend here and there. No, pursuing trend. No, wait for your setup. Once they settle, you take a trade, and that's all. So thank you guys. On this note, I'm going to stop here so that we won't get ourselves confused. All right. I don't want the video to be too long so that guys, you not complain. So on this note, I'm going to say thank you so much. Please subscribe, share, and like my video. Until then, I see you in the next video. Bye for now.